In the first 6 months of this year, 12 Chinese real estate companies defaulted, and now, since Evergrande's debt crisis has been intensifying, more companies have gone belly up. As of September the 5th, 274 real estate companies across China declared bankruptcy, at an average of about one per day. People are talking about when the Chinese real estate bubble will burst and how it might affect the financial market around the world. Hi everyone, welcome to my show. I'm Lei. Welcome to Lei's Real Talk. So what's wrong with the Chinese real estate market, and why do we say it's a bubble that will soon bust? Let's take a look at this bubble. Before the pandemic in 2019, China's housing market was 6 times the size of its stock market. By comparison, the U.S. housing market was about the same size as its stock market in 2019. Orient Securities chief economist Shao Yu said that China's total real estate properties valued at $65 trillion is 5 times China's annual GDP. By comparison, the real estate market in the United States and the European Union is about 1 to 1.5 times their GDP. Shao also said that the total value of Chinese housing market is equivalent to that of the United States, the European Union, and Japan combined. In Tianjin, a city located 75 miles away from Beijing with 15 million people, upscale apartments sell for about $836 a square foot. That's roughly the same price as the most expensive neighborhood in London. But average income in London is about 6 times higher than that of Tianjin. New York City's property prices are the highest in the United States. The average property price is about 9 times a person's annual income, and in San Francisco, it's about 8 times. But according to China's Financial Research Institute, home prices in Beijing are about 55 times the per capita annual income. In Shanghai, it's about 46 times. Guangzhou is 40 times. Ordinary people cannot afford to buy homes in China's big cities. As high as China's real estate prices are, China's home ownership is about 90%. This number is very misleading because there is no way that 9 out of 10 Chinese families own homes. Instead, there is a significant number of families that can't afford to buy real estate. But the average number is high because there's another large group who own multiple dwellings. According to a Sohu November 2020 report, quoting data from the central bank, more than 30% of urban Chinese households own 2 dwellings, more than 10% own 3, and average household ownership is 1.5 dwellings in urban China. Many housing units bought for investment purposes remain vacant. Some netizens say that China has the extra capacity to house another 1.4 billion people. That would suggest a 40 to 50% vacancy rate. I tried to verify the number, but many analyses on housing vacancies were removed from the internet. The officially sanctioned vacancy rate is 20 to 22%. I think this number is understated. Even at the low 20%, it's already problematic. According to data from China's Southwestern University of Finance and Economics, these vacant units tie up approximately 10 trillion yuan or $1.5 trillion of credit resources. A professor at the Shanghai University of Finance and Economics said that during the financial crisis of 2008, rental vacancy in the United States was 10.7%, and vacancy for self-owned homes was only 2.9%. The general housing vacancy in the Netherlands and Sweden, by comparison, is 2%. France is about 6% and Germany 8%. So, how many vacant units are there in China? Pan Shiyi, the founder of one of China's major real estate companies, Soho China, said in 2019 that there were at least 130 million vacant housing units nationwide. Some Chinese media has also mentioned the 130 million vacancy number. Assuming an average of 3 persons per household, that means the vacant units in China can house another 400 million people. That's more than the total population of the United States, Canada, and Australia combined. The extra housing capacity in China can at least accommodate everyone in the U.S., Canada, and Australia, if not more. In the 1980s, to curb the appreciation of the Japanese yen and maintain its trade advantage, the Japanese government implemented a low-interest monetary policy, which promoted the rapid rise of the stock market and real estate prices. Toyota Motor, Fuji Heavy Industries, Hitachi Electronics, and other Japanese giants all got into real estate. In 1990, the land value in Tokyo alone was equivalent to the land value of the United States. Facing a bubble, the Japanese government raised interest rates and tightened monetary supply. The stock market fell by half of its value within 8 months in 1990, and housing prices plummeted in 1991. Both stock and real estate prices continued to fall and didn't fully recover for 2 decades. Japanese refer to it as the lost decades or the Heisei recession. During the 10 years before the recession, the Nikkei average index rose about 590%, and at present, China's Shanghai Stock Index has grown only 50% over the last 10 years. This means that Chinese capital is heavily concentrated in real estate, and the pressure on the real estate bubble is much greater. During the Japanese recession, real estate investments in Japan accounted for 9% of the GDP. During the U.S. 2008 subprime mortgage crisis, real estate accounted for about 6% of the U.S. GDP. However, currently in China, the housing market accounts for 30% of the GDP. So, when this bubble carrying a third of the country's economy bursts, the impact will be unprecedented. The rippling effect of the Chinese real estate crisis is already being felt on Wall Street. The stocks of 2 American companies have fallen. The first is Caterpillar, an American Fortune 100 company that's also the world's largest construction equipment manufacturer. And the second is Goldman Sachs, which specializes in the distribution and investment of bonds for Chinese real estate companies. I made 2 videos on the Evergrande crisis. You can watch them by clicking there. If you enjoy my videos, please like and subscribe to my channel. Thank you for watching, and I'll see you very soon.